Today's episode is a reaction episode. It's for everyone who's been on their phone doom scrolling at God knows AM, and they don't have a CFP sitting right next to them to say, no, that's a really bad idea. This is a new Bitcoin ad I just saw from Coinbase.
Every day, the Fed prints an average of $465 million. That's 26,000 shipping containers a year, created out of thin air. Maybe that's why the dollar loses value over time. But there's one thing they can never print more of: Bitcoin. At the size of a quarter, this is all there will ever be. Shouldn't a store of value hold its value?
All right, so here's the number one thing I can tell you as an investor, and that is when any marketeer is using fear to sell something, you should hold your wallet. That's the first thing that pops out to me in that, right? Is that there's fear, and they're using fear of like, hey, the government's going to print all this money, and then the only way to really truly store value is Bitcoin. I can make that argument, and I don't necessarily disagree with that argument. Let me be clear about that. But from just a consumer standpoint, when they're using fear, the world's going to implode, the only store of value is Bitcoin, that's a little bit of an exaggeration. There's people called maximalists when it comes to Bitcoin, that it's just all about Bitcoin. But for Bitcoin to truly be the only store of value, you have to accept that the entire economic system as we know it implodes, completely implodes. Bitcoin is important. It's an important asset. It's an important diversifier. It is the front end of the risk curve, and it's important to be, I think, in portfolios, but it isn't everything, man. Like, it just isn't. Like, I don't think it's nothing, and I don't think it's everything. What that's telling you is it's the only store of value. I disagree with that.